Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX Connect report. My name is Gonzalo Cañete and I'm here to give you a quick fresh update of the week in terms of equity markets, fixed income, commodities, forex, even cryptos. We're gonna take a look of the movement of Bitcoin. We're gonna take a look of the movement on treasury bonds in United States, very related with the expectations of the interest rate cuts. We're also gonna review the macroeconomic data published by United States early this week, and even the ones that we have seen during the day, during the season today. Today is Friday, 15th of March, and I'm just doing a compilation recap of the whole week, so you see this video just to update yourself in terms of where we are, what we can expect from the market the coming days, and what was the most important events happening. We got many topics to discuss. I want to include you also in this report, equity. One of the main things, let's just go to the equity first and then we can go into details about macroeconomically speaking what is going on. Adobe was presenting results yesterday and has been dropping massively in the market. I'm just trying to use a long-term chart just to show you the best what can I say, the best projection in terms of price. As you can see, we are not yet in the support levels because those support levels are around $430, $450, and we still are in $490 and dropping. Some traders are just mentioned on certain financial blogs that it's an amazing opportunity to buy Adobe, but the problem with Adobe, I was just checking the fundamentals of the company. It's one of the top ones in capitalization, tech sector. So again, it's one of the top sectors also. But do not let yourself believe that just because it's tech industry and tech sector, everything is positive and good. Because if we take a look, let me just take you there. If we take a look to the rest of the sectors, everything since the Federal Reserve gave this promise of cut interest rates, since then all sectors has been rising. So do not believe that tech sector technology has been rising since 2020, since the pandemic. One of the best sectors, super strategic, doing really well, overperformance the rest of the market. But so far, since Jerome Powell mentioned the interest rate cuts, all sectors has been rising. As you can see, one of them is even energy, which I have been mentioning in these reports many times in the last 2 months, 3 months. I suggest even take a look on ExxonMobil, on Chevron, because the drop on oil is temporary. Sooner or later, the drop of the price of the oil gonna rise back again. And even early this week, I was mentioned to you in the reports. What is the reports here? On the market snacks that I publish every single morning with the last 24 hours more important events and the last important news that you should be aware of. I was mentioned this week again that the countries who produce gas and oil, their OPs plus, was mentioned actually that their expectations for 2024 is actually higher expectation in terms of demand than the International Agency of Energy. Which means, like, trusting in that expectations from them, we could say that, well, if it's true, if the demand of oil gonna rise actually, and we are moving away from any kind of potential global crisis or recession, which was our main concern in 2023. As a reminder, the slowdown in China, the recession in Europe, blah, 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 blah. All of these global market situations could cause a drop in the oil demand. But apparently, based on those estimations presented this week, that's not the case, and therefore I think that's one of the reasons why oil market has been responding positively. If you go to, for example, to Brent barrel, the one that is more related with Middle East, you can see that the price is rising, and it seems to be going directly to the new resistance of $88 per barrel, probably around this area. But has been breaking $83 per barrel in the last 24 hours, 48 hours. In terms of another commodity really interesting is the gold. The gold is doing a kind of triangle formation right now, as you can see. Let me draw it just in case. Boom. This kind of formation, this kind of pattern usually is breaking up to continuation, right? But the problem is, from a fundamental perspective, if we really believe in this movement, if we really believe that the goal is bullish, first of all, need to break out the new maximum records, which is something has done a few days ago. But there is something that is usually pulling down the price of the gold, and is the dollar value. If you go to dollar, you can see that actually the dollar value is rising. We got, again, let's explain this with the drawing on the screen. This initial movement pulling down the value of the dollar was caused by an increase on unemployment rate above the expectation. So the market expectation was 3.7% unemployment rate, and it was 3.8, 3.9%. I don't remember, more or less. Okay, that was the last week. I was even making a comment and a video just reporting these results. So based on those expectations, what in my opinion the market was reading in these results, if unemployment rate is rising in the United States, it means that finally US economy is getting weaker, and therefore Federal Reserve has no excuses to keep on hold the interest rate cuts, so they can move forward and cut the interest rates earlier. Why? Because they promised to us in December that probably by March the market was discounted that by March the Federal Reserve would start to cut interest rate. It never happened. It didn't happen. Now we are almost at the half of March, and the market is discounted. Not even March. They switched from March to May, and now they're talking about June or July. Alright, so that's the situation. Even this week on Monday, I was mentioning our market report that you can find on ATFX Connect website. On our blog section, you can find market snacks. On Monday, I was giving to you as a recap of the weekend one of the comments done by one of the top economists in Wall Street in the United States, who was even suggesting that maybe, get ready, there is no interest rate cuts this year. That's his bet. That's what he's saying. He's standing and saying there is not going to be an interest rate cut this year, and Federal Reserve has made a super wrong move in December. They cannot cut the interest rates. On the top of that, this week, yesterday actually on Thursday, we have seen retail sales, which was a little bit weaker than expected, and that will be positive for the market because, again, Federal Reserve wants a weak economy in the United States to justify the interest rate cuts. If the numbers are going well, the Federal Reserve cannot justify the interest rate cuts, and if the interest rate cut doesn't happen, Wall Street doesn't receive liquidity, the money. So Wall Street need that, the market need that, and the Federal Reserve need that to keep on going with the plan. Okay? So Thursday, PPIs, which is Production Prices Index, which is one of the factors that is measuring to estimate the PCE inflation index, calculated used by Federal Reserve, one of the most important measurements of inflation in the United States, one of the most serious ones. We got a few days ago the general inflation, which is based on Consumption Prices Index, but PCE is apparently the most serious one, more specific, and overall, which is what our concern is, Federal Reserve is taking this PCE more seriously. Now, PPI, this index, was higher than expected yesterday. Let's go to the calendar. It was actually 0.6 over 0.3 expected. Therefore, it was double than expected. Now, this could cause a jump and increase, a rise again on inflation. And if that's true and that happens, that finally happens on the PCE, the next PCE is actually showing inflation rising. It means that the Federal Reserve has no reasons to cut the interest rates, and it means that we are in troubles in terms of equity, because this is the inflation rate in the United States, general inflation rate. As you can see, it's moving up and down, up, down, up. So be cautious, be careful. The next inflation rate could go higher, and therefore Federal Reserve will say, oops, sorry, but with these conditions we cannot cut interest rates. And why is that important, Gonzalo? Well, I tell you why. Because if after all that's the case, what is going on here? If after all that's the case, I can tell you all the bullish movement we have seen in SP 500 since December, with the announcement, where was here is starting, right? December, end of November, unemployment, well, labor market was giving like weakened results, and then we got also Jerome Powell speaking about the possibility of cut interest rates. Boom, everything was rising. That means that by then, if the interest rate cut doesn't happen, all these movements caused by the promises of the interest rate cuts could just boom fall. Why? Because the promise of that interest rate cut never happens, and therefore all the progressive market we have seen, the bullish markets rising, breaking new maximum, new top records, they are gonna collapse. If that's the case, they are gonna collapse. Not also just the US equity, but also European equity, because we know without any actions from the Central Bank of Europe, European equity has been rising just by the announcement of the Federal Reserve, as you can see here. Even when the ECB was saying, no, we didn't discuss at any point the interest rate cuts, the market was rising crazy and keep rising crazy because it was based on the promise of Federal Reserve. Fed promised the interest rate cuts, and even European market was rising because, as you know already, Federal Reserve is the central bank of the world. The world is quoting absolutely everything in international markets in one single currency, dollar. Dollar is the currency of the world, and the Federal Reserve is the biggest central bank in the world. If they say they're gonna cut interest rates, all the market dance, okay? And that's why if they say they actually cannot cut the interest rates, on the market gonna, yes, falls, okay? Well, we have been mentioning gold. We mentioned also how I can take out this. Okay, we mentioned the gold. We mentioned also the oil. We need to mention Bitcoin, for example. We have been mentioning also Adobe, right? If I'm not wrong, because I was just making a few video reports in the last few minutes, so I don't know if I mentioned in this one or not. I think so. And what else? What else? We got the Bitcoin just dropping back again, but seriously, consider the evolution of this asset. Bitcoin has been doing amazing since the last year, 2023. What happens in 2024 was even absolutely crazy. This movement breaking up new records. So what we can see right now is just a correction, and a standard correction, even a pullback. So be patient. I believe it's an asset for buy and hold, and that's all we need to say about Bitcoin in this case. And what else? We mentioned we have seen SP 500, we have seen also DAX 40, oil, gold, Bitcoin, dollar index rising back again. I think I just mentioned this, not sure. But again, unemployment rate rising, dropping the dollar down. PPI and inflation, expectation inflation are higher than the dollar index is rising, and therefore the bond, 2-year Treasury bond in United States, it was falling. The first move with a weaker labor market in November, United States. December, it was falling because of Jerome Powell words, promises about the interest rate cuts. By February, the market saw that actually it was not happening in March, as it was discounted early in the beginning. And therefore, when we start discussing maybe by the half of the next year is when it's happening, interest rates, yields in the bond was actually discounted that interest rate is not happening. The drop on the interest rate is not happening, and therefore the yield was rising. Now, by this moment is when they dropped back again, when we saw that the employment rate was rising back, and now it's back on track again with it's discounting basically whatever is about 450, 445 is giving to you. If the yield is quoting about those levels, it means that the interest rate cuts is not happening so far at the moment. Okay, you can follow this as an indicator, because it's very interesting to see how the yields are adjusting and discounting in advance what's going to happen with the market. That's all from my side. We need to end in the video here, but remember, if you want to keep updated, first of all, you got everything on our blog, atfxconnect.com. You go to the blog section, market snacks, and you got last 24 hours of the market explained, not only technical, fundamental, last events, explanations, proper research, and also geopolitical section when I talk to you about the last news, the war, Ukraine, Middle East, blah, 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 so on. But also, I'm sending this by newsletter. So if you want to be included in newsletter, it's completely free. You just need to send me an email to my email address, just requesting to get included on the newsletter, and I will happily, I'm more than happy to include you in my newsletter, so you will receive the last news freshly on your email every morning. Okay. That's all. Take care and good luck with the market. Have fun. Bye bye.